Hello guys, welcome back to this channel. So today I want to show you how to catch sniper entry trades that moves fast enough and at the beginning of session without you struggling a lot to understand the market using a set criteria. So like in this case, this should be at least a 1 to 6. A 1 to 6 should be the target, but ideally the strategy says 1 to 4, but I'll explain why 1 to 6 is the most ideal in this situation. So this is how the trade would look like, and they're always minimal drawdown, or so this played almost 1 to 6. Not sure if it clicked, or it depends with where the stop loss was. Stop loss should be exactly at the close of this so that you get a 1 to 6, somewhere like a 1 to 6 there about. So stop loss just above here, and then you can get it at this pullback down here is where you get your entry. Stop loss just below here. So let me explain using this strategy. This is a swing strategy. You can hold such trades for long. There are conditions for holding, so those ones are not listed here, but ideally the strategy is we follow the trending daily directions, and then we check first 4 hours alignment, and then we check 30 minutes V-shaped aggressive manipulation and wicks, and then we enter on 30 minutes full body closure and 15 minutes curve. So this is the 30 minutes full body closure. So stop loss, this is the safest. TP above, so the ideal TP should be here, but the strategy requires at least a 1 to 4, so slightly there, 1 to 4, and then BE at 1 to 3. Psychology is 10 trades rule. If analysis is right, it will always play out. And then lower your expectations, because happiness begins when expectations end. So in this case, we should be expecting a loss, because ideally common sense dictates that this is the distance that the market should be traveling to reach a stop loss. Only if you are insane, you would be over ambitious enough to think that the market should be traveling all this distance for you. Yet the closest distance is the one just below here. This is the closest distance. So always expect a stop loss, because you are really playing a serious game of expecting more and giving less. So in that case, even you with common sense, you can clearly conclude that the easiest route for this market is to move from here to here. That is why this distance is very small compared to this distance. This is take profit distance, and this is stop loss distance. So our expectations should always be equivalent to what we are giving the market, not to what we want from the market. So this is the stop loss, and therefore our expectation is to have stop loss being hit first before take profit. So but in this case, if take profit is hit first, then well and good. So let me explain from a daily time frame this strategy in details. So I always look for such trades. I have a swing strategy, and then I have a day trading strategy. Like today we are in one, one here. So like this is one of them. I'm expecting some 1 to 6. Yeah, but currently I'm already in break even. Same to this. I'm expecting a 1 to 4. I'm already in a break even in this. Actually, it's almost a break even. I don't just place my trades at break even. So you can join the Telegram. It's free of charge, so just join. Now meanwhile, let's go to daily time frame and start the analysis afresh. So let me go to daily, and then now we can bar replay and give you the reasons behind me taking this trade. So just check in the Telegram group. Some of these trades were taken in that group, and some are not taken. So I'm just backtesting everything, because like on this day 25th, I had almost 7 pairs that gave me trades, but I only take 2. As you can see, the list is very long. here was trade, there was trade here, 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 there was trade here. So there was trading also AUD USD. So I choose the best. That day I did not trade gold. So let me give you the reason why this trade should play out perfectly. That is the wish. Like I said, we deal with wishes here. After analysis, we deal with wishes. We don't deal with expectations. So we just wish. So I want you to be very keen here. What is happening is that if you check this market, ideally it's buying. This is bullish market. So when suddenly market closes on the opposite direction, that is trending daily time frame direction, close opposite. This is a trending market, and then all of a sudden it closes on the opposite direction, which means this day it closed on sales. That from a SMC perspective, what has happened there is that it has 4 hours has pulled back a little bit deeper pulled back in 4 hours, maybe to decisional POI, or 4 hours has pulled back to some fair value gaps, etc. So that is why we only wait to trade when 4 hours as a line, like in this case here too. This was also a very good trade. This was a very good trade because the market is buying, and then all of a sudden the market pushes down. So this was a very good trade, and as you can see, it gave good buys. Our take profit should be here. So if you want me to do that, just comment do analysis for the green arrow analysis, and then I'll know that you need this analysis too. So what happens here is this. So we have confirmed that the daily time frame direction has closed opposite. You can reframe all this, you can refresh this strategy, this checklist, based on your understanding, provided you get it correctly that the market must close in opposite direction. Secondly, we go and wait for first 4 hours alignment. So we go to 4 hours. Like myself, I wake up early enough to look for this and start looking at them at Asia. But for the USD pairs, they usually play in London sessions, so don't worry. It's only this AUD pairs that plays during Asia, but this plays during London and gives you good entry during London. So we wait for the first alignment. Here is where you need to be again keen. So we go, that is first push. This is 4 AM candle, closed 4 AM. Then the next one, this is a 4 AM candle that starts 8 AM my time. So just cross check with your time in your country. So as you can see, high of the previous candle has been taken. That is what we mean by alignment. When high of candle has been taken, that is called alignment. So basically you can go risk entry. That is just immediately they align, you just go risk entry. Stop loss should be below this one here, not this one, immediate one, because it can come and liquidate this immediate one. So ideally it should be somewhere close there, and then you target at least a 1 to 4 if it plays out. If it doesn't play out, well and good. So in most occasions this would be a 1 to 4, but in this case it's even best to target just a 1 to 4. If you are going risk, it's better to target a 1 to 3, because after taking buy side liquidity, the market will always want to pull back. So that pullback is what is going to impair your profit. So that is why it's just advisable to target a 1 to 3 when you take risk entry that is overlapping. Like myself, I took a risk entry here, and you can see this is the daily high, this is the daily low, and it is giving a 1 to 6. So in this situation, it's different case where we are having this high is so small, so we have to target a 1 to ideally should target a 1 to 3 or a 1 to 4. So this should, let's see if it hit 1 to 4 directly. So let's see, did it hit 1 to 4? So that trade was tagged in, and then now you can see the way it missed with small margin. it missed with small margin, and then it reversed. It missed with very small margin, and then it reversed back. So that is risk entry. Now let's go to our to other checklist entry. If you don't want to go through with the checklist, you can take risk entry, and the rest is just okay. You leave them the way they are. So let's use the whole checklist. So we take 30 minutes. We go to 30 minutes to look for V-shaped aggressive reaction. So we go to 30 minutes. Let me delete this. So 30 minutes. Where is that? So we go to we look for 30 minutes aggressive reaction downwards. That would be 4 hours pullback. So that is the meaning of that 30 minutes V-shape aggressive manipulation and wicks. So that is what we check for. So ideally it should start by taking this high. If it takes this high first, it's very high probability now, because that would be second break of structure on 30 minutes upwards, and that would be nice and high probability. So let's see, the first candle move takes the high and then closes. Now at this particular point, if I was taking this trade, I would have taken that trade, because there is no imbalance here from my understanding. If you see imbalance, like in this case, that is when we expect such aggressive moves to push down like this, if there is imbalance to be taken when 4 hours closes. But when there is no imbalance like this, immediately the market closes bullish like this in the direction taking the high of the previous market, then you can just take it. But now one thing you have to do is that the stop loss has to be a little bit bigger for room to breathe. But in this case, me, I would have just taken it at this particular point realistically. So if that was the case, that would, what would happen, targeting at least a 1 to 6 there, about 1 to 6. So what happens, start to pull down, and then immediately, oh, you are stopped out, which is okay. So immediately you're stopped out, you can see that this is the aggressive V-shape reaction we were talking about. You can see the way it pushed up and then immediately it pushed down. This 30 minutes push down is just a 4 hours push down before, because all market push down up, or up down in that manner. So this aggressive move is always 30 minutes manipulation or 4 hours pullback. So you can see it has even given us a week, which is very important. This week here is very important because it shows that the momentum is down and we are done pulling back. So what we'll be waiting for, if this candle closed bullish, if it closed buy, would have gotten a re-entry and a stop loss here. But the reason why we have not taken this re-entry is because it has closed still bearish. So we are waiting for the next bullish close. So let's see if we get a full body candle closure. Correct. You can see from this analysis what has happened. Full body closure, and if you check inside this full body closure, you are going to see a scope being formed. So ideally the scope has not been formed successfully, but what is important is 30 minutes full body closure. So immediately we get into the trade, and when I lose like this, when I take as an entry and then it loses, I must just target a 1 to 6. That is when I'm sure at least and I'll be trading my stop loss anyway, so that I don't lose again. So stop loss very tight, they're about very tight, because now I believe that the pullback is over and now we are in for a run. So a run that is should be a 1 to, at least a 1 to 6 is always ideal. That is the average RR, by the way, of this strategy, 1 to 6 if you want to take for 1 to 2 days. But if you want to hold for long, it can even go 1 to 20. So immediately the market pushes down, up, that would be a break even, and then now that is it. So what did I say? If market takes buy side liquidity according to the principles of ICT, I don't trade them, but I understand almost everything in ICT and SMC. That is why this strategy is based off SMC and ICT. So you can see the way it had minimal drawdown and it was good for addition of positions. Like where would you add a position? When the first 4 hours closes and it is time for another pullback, like in this case, when this was a pullback, when this closed above here and breaking even this high, this was an ideal opportunity to enter again. Take note that whenever 4 hours closes, there must be pullback. Target, this gave a 1 2, should be at least a 1 2 3, so that is still fine, just like that, and you get a very good entry. Now from the ICT's perspective, if this is buy side liquidity, this is sell side liquidity, immediately buy side liquidity is taken, we should expect a pushback down. So that is why this strongly worked here. This is first full body closure, confirming that now the momentum has died out. Then now, as you can see, it's playing in, but the problem with this is that normally the pullback can be very small and then it continues. That is why I don't trade buy side liquidity or sell side liquidity ICT trades. So that is an example of that. Now again, I can add you one example that did not work out, because not all the time the market should be working in your favor. Who said that? So let me give you an example of one that did not work out, and then we wind up. There's also trade today. If you check, today is on 2nd, there is a gold trade that is for sales, and it is currently playing very well. Maybe I can go do that and then give you the reason why I did not take it. The reason why I did not take that one is also there, but the strategy remains the same. Now for the one that did not work out is this is low probability, just like the one of today. This is low probability because, as you can see, the market pushed up and then instead of moving upward, it has started ranging. So whether this closed down here, it is low probability. We could still look for buys to take this high, and then this high, and this is our trading range for the daily time frame. And then we get our alignment, and then we push it back. But as you can see, this is now starting to range, and I don't like trading ranging market because it is low probability. Same to when the market is only giving two pushback in one direction like this. We need at least 3 closure, like what is happening today in Euro USD. We need 2 closures, 1 2, and then again another 1 closure, so that it can confirm that the direction is purely bearish. But in this case, the market is just ranging according to this strategy. You don't need to take when the market is having a lot of ranges like this. You ignore, because you'll be chopped up and down, but the same thing is still working. So this is the overall direction. So this is the high that closed yesterday, and this is the low. So we are expecting this market today to take this low and eventually even take this other low. So let's go to 4 hours. We've already marked that it has closed. This is low probability sales, but still okay. So we go to 4 hours. I don't take such low probability, by the way. I'm just showing you that is what I'm expecting to happen, but I don't take it, because more often than not, even if they are going to work today, tomorrow they may not work. So I just avoid taking low probability trade, though I'm expecting that this was the alignment. This is at 4 a.m. my time, Kenyan time. So if this is 4 a.m. Kenyan time now, the market has already aligned. It will find me awake because I wake up at 4 a.m. thereabout. Then with 30 minutes of preparation, so I'll just get into this trade. This is the first alignment, not second, not third, first. Then we go to the first 30 minutes V-shaped reaction. So let's wait and see if we are going to get manipulation. So let's see if we are going to get manipulations. So ideally, like I said, if it starts by taking this high, it makes it very much high probability. But if it doesn't, well and good, but now you just put in mind that it is low probability. It is low probability entry, like the one I took today. Higher time frame is high probability, but entry is low probability. The one I took today, this one. because ideally the high should have been kicked in here, but I took risk entry. Risk entry covers everything. That is why I'm able to take it. If risk entry has covered everything, then there's no problem. So let us wait 30 minutes. So okay, start by taking it. That makes it now high probability, because even the low of the next 4 hours have been taken. So whatever happens here is just pullback. Even if it pulls back to somewhere here, it is still pullback. So let's see. Then now we are still getting pullback, and then we get a wick, which is nice. So let's wait for a closure down and see. So that is a closure down, though that one is a little bit low probability and risky because it is not a full body closure. This is like a dodgy one, but at least this week and full dodgy, and this one, just take it because the market is imperfect. You don't expect all the time to be perfect. So at least we've gotten a closure, and we can just place our stop loss above here. We can give it a relatively bigger stop loss, like 25 pips, and then target at least a 1-2. Ideally the market should be pumping down to here. Market should be pumping down to here. So this is where now the swing comes in. So if you get it at the top, you have enough room to swing it to 1 to 4 to 14, but in this case 1 to 6 is just extremely perfect. So this one you can target maybe a 1 to 7 since the market has got enough room to reach here. So if it gives you a stop loss, you can just get in again. Stop loss is part of the game, and the expectation, surely look at this expectation and this expectation. This is better to wait. So let's see how the market does. So it moves like that. Then now, as you can see, let's see. So currently that is where the market is. This is where the market is. So this is 1 to 7 if you are targeting 1 to 7, and as you can see, it has already given you a 1 to 6. So even if you're targeting just a 1 to 6, would have been out of the market by the time London session was opening at 8 at 10. This is now before even London open. You've already bagged your 1 to 6 because you woke up early and now you've taken your trade. Now that is how to trade this strategy. Just join the group, it's for free. I still don't have anything to sell you. Maybe if I have, I will sell you one day, but not now. So just trade with me in the group there, and then you can always ask your questions and then I'll respond. Please backtest. This strategy is very powerful.